Let's take a look at two e-commerce businesses. Both have the same exact revenue and the same exact profit, but one pays $45,000 less in taxes than the other one. Now, the difference here is documentation. The second business knows what they can legally deduct and how to track it properly. So, in this video, I'm going to be walking you through the major tax deductions available to e commerce sellers, from the obvious ones that everyone knows to the ones that could save you five figures that many sellers completely miss. Now, if you're somebody that needs help with our team of tax specialists at EcomBalance, be sure to check out our link in the description to set up a time. Let's make sure that you're keeping more of what you make. Now, before we get into that, I want to let you know about a quick disclaimer. Unless you work with us, we do not know your situation. So you need to make sure to speak with your accountant, bookkeeper, tax advisor, etc., about your specific and unique situation to ensure what we talk about in this video applies to you. Because depending on your entity setup and the different structures that you have, we need to make sure, or you need to make sure, that these write-offs and other things apply to your business specifically. That's where our team can help. But if you have somebody that you work with, be sure to speak with them about these things first. Now, before we dive into the specific deductions, you need to understand what the IRS actually allows. Now, the IRS defines business expenses as the costs of carrying on a trade or business. To be deductible, expenses must be both ordinary and necessary, as you can see on the screen here. Ordinary means it's common and it's accepted in your industry. Necessary means that it's helpful and it's appropriate for your business. So here's what this means in plain English. If it's a normal expense that e-commerce businesses typically incur and it helps you to run or grow your business, then it's probably deductible. The key word here is it has to be directly related to your business operations. Now, there's one category of deductions that many e-commerce sellers either miss completely or they calculate it wrong, and it's usually the biggest single deduction on your tax return. So I'm going to show you exactly what that is and how to get it right in just a few minutes. Now, your job isn't to leave money on the table just to be safe. Your job is to deduct every legitimate business expense that you're legally entitled to. So let me show you what those are. Let's start with the three largest expense categories for most e-commerce businesses. First is your cost of goods sold. Second is your platform and payment processing fees. And third is your advertising and marketing. Now, we're going to break down each one of these, starting with cost of goods sold. Now, this is it. This is usually your largest deduction. It's the one that most sellers mess up. Cost of goods sold includes the direct costs of the products that you sell. So that could be the buy cost of your inventory that you sold, not what you purchased. It has to be what you actually sold. It can also be your manufacturing costs, like any raw materials or assembly, or your product packaging, your freight and shipping to get those products to you, any customs and duties. Now, here's why this matters so much. Let's say that you did $1 million in revenue and you spent $400,000 on inventory that you sold and any of the related costs that go into that. Those $400,000 come directly off of your taxable income. So at a 35% tax rate, that's $140,000 in tax savings. And so it's very important to make sure you get your cost of goods sold done correctly. But here's where most sellers mess up. Cost of goods sold is tied to your inventory accounting method. You need to track beginning inventory, your purchases, and any ending inventory correctly if you're selling physical products. Now, if you undercount your ending inventory, you're essentially overstating your cost of goods sold, and that can cause problems in an audit. But if you overcount it, then you're leaving deductions on the table. This is why clean bookkeeping matters. Your cost of goods sold calculation flows through your entire tax return. Now, next is platform and payment fees. And with this, you want to make sure that every fee that you pay to sell online is fully deductible. Okay. And so platform fees can include your Amazon referral and FBA fees, your Shopify monthly subscriptions, your Walmart marketplace fees, your eBay listing and final value fees, and any other marketplace that you sell on. Payment processing fees, however, would include things like Stripe or PayPal or Square fees, your credit card processing fees, your chargeback and dispute fees, any business banking fees that you have, as well as wiring and ACH transfer fees, especially if you're purchasing inventory or dealing with anybody that requires wires and ACH. Now, these fees add up to tens of thousands of dollars per year for most sellers. And so you want to make sure that every single one is captured in your books. Your settlement statements from Amazon, Shopify, and other platforms are great documentation, but they typically don't cover every single fee that we may be talking about here. Now, the third one is advertising and marketing fees, because every dollar you spend acquiring customers is deductible. And these can include things like your Amazon pay-per-click and any sponsored ads that you run on Amazon. It can be Facebook and Instagram ads, Google ads, TikTok ads, YouTube ads, influencer marketing partnerships, any email marketing software that you pay for, graphic design for your branding, photography, photography for your ads and listings. Essentially, if it's promoting your business or products, it's deductible. Now, before I show you the deductions that many sellers miss, if you're realizing that you haven't been tracking all of this properly, we can help. At EcomBalance, we specialize in e-commerce bookkeeping and income tax and make sure that every single deductible expense is captured and categorized correctly. Now, there's a link in the description to schedule a time with our team. We'll review your books and we'll show you exactly what you might be missing. So let's talk about all the software and tools that you use to run your business. Every subscription and tool that you use for business is deductible. Your core business software can include things like your e-commerce platform, if you're selling on Shopify, WooCommerce, etc. Inventory management tools such as Inventory Lab or SoStocked or Restock Pro. Any repricers and multi-channel listing software, accounting and bookkeeping software such as QuickBooks, Xero, A2X, or Link My Books, and any listing optimization and keyword research tools. Now, from a marketing and creative tools standpoint, you have your email marketing platforms I mentioned earlier. You also have design software for Canva and Adobe Creative Suite, your photo and video editing tools, your social media scheduling tools, and you also have operations and security. So project management software would be included in this list, as well as communication tools with Slack or Zoom, any password managers you pay for, and any cybersecurity software you may have. Most e-commerce sellers have anywhere from $500 to $2,000 or more per month in software subscriptions, and that's between $6,000 to $24,000 per year in deductions. So you want to make sure that you're capturing all of it. Now, next would be office equipment and supplies. Now, in this case, you would be looking at office supplies, furniture, and equipment used for your business. Now, this could include computers, monitors, printers, scanners, your desks, chairs, shelving, any other office supplies such as paper, ink, shipping labels, as well as phones and accessories. Now, here's an important note. Expensive equipment might need to be depreciated over time rather than being deducted immediately. The Section 179 and bonus depreciation section often allows you to deduct the full cost in the year of purchase. So your CPA will tell you which method is better for your situation, but the key is making sure that these purchases are well documented. Now, here's where it gets interesting. You can deduct the business use portion of your personal expenses. If you use your personal vehicle for business, you actually have two options in this case. So option one would be the standard mileage rate. This is where you're going to track your business miles and multiply by the IRS standard rate. It changes annually, so you need to make sure that you're using the correct one for the year that you're in. Now, option two would be actual expenses. And in this case, you're going to deduct the business use percentage of fuel, insurance, repairs, maintenance, loan interest, etc. And so you want to make sure that you're deducting this properly and tracking it properly. Now, for business trips, this can include things such as supplier visits or shipping runs to the post office or product sourcing and shopping for your inventory, meeting with contractors or service providers, and even bank deposits if you have to run to the bank for your business. Now, even if you only drive for your business once a week, those miles add up. So you want to make sure that you track them because they are deductible. Now, the next thing is going to be home office. Now, this is a big one that many sellers either miss or they may even be afraid to claim it. Depending on your entity setup, you want to make sure that you do this properly, because if you use part of your home regularly and exclusively for business, you may be able to deduct a portion of the following things. So rent or mortgage interest, your property taxes, your utilities, such as your electric, your gas, your water, your internet, your homeowners or renters insurance, your repairs and maintenance on that home, as well as your HOA fees. Now, the calculation here is fairly simple. You essentially take your business use square footage, you divide that by your total home square footage. So if you're using an exclusive area of your home at 1,000 square feet and your total home square footage is 4,000 square feet, that would be 25% of your home is used for business. And then you take your total expenses times that 25%, and that's effectively what you can write off. Again, you want to make sure that you speak with your accountant on this or our team to help you come up with this calculation, because the home office deduction is perfectly legitimate if you actually use the space for business. Just make sure that it's used regularly and exclusively for business. It's not your kitchen table that you also eat dinner at. Now, if you have a dedicated room or area, be sure to claim it because it could save you anywhere from $5,000 to $15,000 per year. Now, the next thing would be cell phone and internet. So you may also be able to deduct the business use percentage of your personal cell phone and your internet. Depends on the situation and your entity structure. But if you use your phone 60% of the time for business and 40% for personal, you can deduct 60% of your annual phone bill. Same with internet. If you work from home and you use your internet primarily for business, that percentage may be deductible. You want to be tracking your usage for a typical week or month, then calculate the percentage and apply it to the full year. Now, let's talk about the people who help you run your business. Now, this will fall under labor and professionals. And so this can be anyone from your virtual assistants, either overseas or in the country that you operate in. It can be your freelance graphic designers. It can also be product photographers, copywriters, your pay-per-click managers, and really any independent contractors that you have. Now, you need to make sure that you are following 1099 compliance and the rules for the country, but these are deductible expenses. Now, additionally, you have employees. So if you do employ anyone, you have your wages and salaries. You also have bonuses, payroll taxes, or at least the employer portion of payroll taxes. You also have workers' compensation insurance, employee benefits. All of those things are fully deductible. Additionally, every dollar that you pay to professionals for business advice or services would also qualify. So that could be your accountants and your bookkeepers, your attorneys for any kind of business matters, business consultants, coaches, your tax preparation services. Professional services are an investment into your business and they are fully deductible. So the right accountant or consultant often saves you more than they cost. And you can also deduct education that improves or maintains skills related to your current business. Now, business books and publications would count. So would online courses about e-commerce or Amazon or marketing. Industry webinars and workshops would also count, as well as conferences and trade shows. But here's an important caveat that you need to know. College tuition and degree programs have specific IRS rules, so those might not qualify as business deductions. But courses and training directly related to your current business, all of that is absolutely deductible. Now, the next thing is insurance and fulfillment and protection. All business insurance premiums are deductible. General liability, product liability, business property insurance, cyber liability insurance, all of that is deductible. If you're paying for it to protect your business, it is deductible, so be sure that you're deducting it. Now, let's talk about shipping, fulfillment, and storage, because everything related to getting products to your customers is all deductible, from packing and shipping supplies, such as boxes or tape or bubble wrap, labels, etc., any postage and shipping costs that you have, prep services such as polybagging, labeling, bundling, third-party fulfillment fees for FBA and your third-party logistics company, as well as warehouse or storage unit rent and warehouse utilities and maintenance. Now, if you're paying for rent for a storage unit just to hold inventory, that's fully deductible as long as it's just for the inventory for your business. Now, by the way, if you're watching this and you're thinking, hey, I have no idea if I'm capturing all of these deductions or any of these properly, you're not alone. This is exactly why we have EcomBalance. So we make sure that every deductible expense is tracked, categorized, and documented so you're not leaving money on the table. So be sure to click the link in the description to schedule a time with our team. We'll do a free review and show you exactly how we can help you. So let me rapid fire through some deductions that are commonly missed. First would be inventory losses. You can deduct the cost of unsellable or damaged inventory, your donated or destroyed inventory, your lost or stolen inventory, as long as there's documentation, as well as unsellable customer returns and any allowances for defective products that you order. Now, if you had to dispose of $10,000 worth of inventory that got damaged in transit or at the warehouse, that's a $10,000 deduction if it's documented properly. It all comes back to your documentation for these expenses. Next would be travel and meals. So business travel expenses could include flights for trade shows, your supplier visits, your conferences, hotels and accommodations for those trips, as well as transportation with Uber, rental cars, or parking. And you also have baggage fees. Now, with meals, there are specific caveats, but typically meals while traveling for business, if you're out of town overnight, would be deductible, as well as meals with customers, vendors, or potential business partners. Because the deductibility of meals has changed in recent years, so you want to make sure that you work with your CPA to ensure that you're following current rules. The next thing on this rapid fire list is business taxes, licenses, and retirement. So business licenses and permits are all fully deductible, as well as certain state and local business taxes, trademark registration, and IP protection fees. And your retirement contributions, well, this depends on your entity type and the type of retirement plan that you have. So solo 401ks and any SEP IRAs and other plans may allow significant deductions, but you definitely need to coordinate with your CPA and team to make sure that they're set up correctly. Now, a few more that sellers often forget would include product samples that you purchase for research, professional photography and product images, product testing and quality control costs, any currency conversion fees if you're importing, as well as interest on business credit cards and loans. So how do you make sure that you're capturing all of this? First, you want to keep receipts and digital records for everything. Second, you want to make sure that you separate your business and personal finances and have one bank account and one credit card for business only. Third, you want to track your mileage and your usage percentages. So you can use an app like MileIQ or keep a simple log for your mileage. And in terms of usage percentages, you can figure that out based on the calculation that I gave you earlier. Now, the fourth thing would be reconciling platform reports monthly. You want to make sure every transaction from Amazon, Shopify, etc., is in your books, and you want to have that done monthly so you have a great overview of how your business health actually looks throughout time. And fifth, you want to work with a qualified tax professional, preferably one who specializes in e-commerce like we do at EcomBalance. And here's the truth. The IRS doesn't care if you take deductions. They care if you can prove them. So you want to make sure that you document everything, you keep it organized, you make it easy to defend if you're ever questioned. So here's a simple action plan that you can follow. Step one, I recommend going through your bank and credit card statements for the last 3 months. Identify any business expenses you may not currently be tracking, at least tracking well. And step two, you want to set up a system. Even if it's just a spreadsheet or a folder on your computer, save your receipts, document everything going forward. So if you ever are audited and you need to go through that, you have a specific folder where you can prove all of the documentation necessary. Step three only applies if you're using your personal assets for business. So that could be your vehicle, your home office, your phone, and start tracking your usage percentages now. And then step four, if you want professional help maximizing your deductions and making sure nothing falls through the cracks, schedule time with our team at EcomBalance. We specialize in e-commerce bookkeeping and in income tax planning. We know exactly what deductions apply to your business, how to document them properly, and how to maximize your tax savings legally. So be sure to click the link in the description to schedule a free strategy call. We'll review your specific situation and show you exactly what we can do for you. Now, if you found this valuable, hit that subscribe button. We release videos regularly on e-commerce operations, tax strategy, financial systems, and the frameworks that actually can help you scale your online businesses profitably. Now, we know that the tax code is complex, but it's written to allow legitimate business deductions. You're not being aggressive by deducting business expenses that you're paying for. You're being smart. Every dollar that you deduct is a dollar you can reinvest in inventory, marketing, your team, your systems, and it's a dollar that stays in your business instead of going to the IRS. So know what you can deduct, document it properly, work with someone who can help you maximize it legally. Use this guide, implement these practices, and if you need help, our team is here. I'll see you in the next one.